Trading futures and options on futures involves substantial risk of loss and is not suitable for all traders and investors. Oftentimes in futures trading, you have a high combination of leverage and volatility. And although this could be an equation for opportunity, it's also an equation for risk. So be careful. Only fund your futures trading account with risk capital. My personal definition of risk capital is money I could afford to lose, doesn't change my lifestyle, or overly stress me out. As human beings, we make bad decisions when we're under stress, so be in a good spot. Remember, micro contracts could be friends. Take it easy on the day trade margins. You get plenty of leverage without maxing out on those day trade margins on a regular basis. We'll be taking a look at a real-time simulated live NinjaTrader trading platform today, and none of this should be construed as trade or investment advice. Past performance not indicative of future results.
Thank you. Good afternoon and welcome to Technical Analysis Explained. I'm your host, Tom Schneider, CMT with NinjaTrader. And on this live stream, we like to talk about technical analysis, concepts, studies, indicators. We usually focus on one item and do a deeper dive, or one topic and do a deeper dive. And today is no different. Today is something that is a little bit special to my heart. It's called point and figure charting. You may have heard of it. If you're new to trading, you might not have heard of it. But basically, point and figure charting is a style of charting that goes back, over 100 years to times before, obviously, they had computers, times when traders would actually write down the prices that are basically coming off the ticker tape and onto pieces of paper to make sense of the market. So with that, let's just jump right in and look at the charts, and I'll try to explain how these charts evolved and how you can use them on NinjaTrader. Now, when you bring up a chart on NinjaTrader, you go to a new chart, you might see something like this. You might see a candlestick chart or a bar chart. And these charts are based on time, meaning each bar represents the trading for a specific period of time. In this case, I have a daily chart up. This is crude, April crude. And I have a daily chart up, and each bar represents the trading that happened for that day. Pretty self-explanatory, pretty straightforward, and probably the most common type of chart you'll see on any platform, but certainly NinjaTrader as well. Now, point and figure is a little different. Point and figure is a style of chart that, yes, it does have time on the bottom, but it's not constructed because of time. It's actually constructed based on how the market moves. So that's what's fascinating about this. To get to a point and figure chart in NinjaTrader, the best thing I think you can do is to bring up a regular chart, and I'll show you how to change that. But first, let's talk about what we might look for when we're setting it up. So when I'm looking at a daily chart of crude, and let's say I want to do some longer term analysis of a point and figure chart on crude, I might look at the scale over here. This scale is the price scale, and I want to see, what is this range? And you'll notice it goes from 67 to 91. This is actually a perfect target area that I think we can use for point and figure. Now, some hardcore point and figure chartists would say this is the way it has to be done. I think you can tailor the way this chart is constructed to your needs, but the way I look at this is point and figure charts they pretty much section off the prices into kind of nice increments, right? We're not looking at every tick when we're looking at a point and figure chart. We're actually looking at what's called a box. Now, if you can imagine graph paper, right? When you were younger, you might have seen graph paper in school, or maybe your mom or your dad worked at a place that had graph paper, like my dad did at his work, and he used it, and he would bring some home, and you'd do all sorts of things with that graph paper. Well, point and figure was no different. Basically, what would happen is these traders eventually, well, maybe right out of the box, they would write a price down as it came across the ticker. So let's say crude is trading right now at 78.04, 78.02, 78.06. Back then, they didn't have decimals. They had fractions. So if you're thinking about stock charts, they might have traded in the quarters or the halves. or maybe even the eighths back then. And instead of writing a price that had a, a, a fraction in it, they would drop the fraction because they realized they didn't really need to know what that fraction was. They weren't that in granular detail. So they would drop the fraction and they would just use the figure part of the figure part of point and figure. And they would write these numbers down in sequence on a piece of paper. Then they realized, well, if we did this in columns instead of rows, and we could do it in order where they might be on a y axis price scale. So they started organizing their data that to us would look like a chart. So I'm simplifying all of this. There's plenty of research you can do if you wanted to find the history of this. And so what happened was they would have this graph paper that had numbers in it. Then they realized at some point, we don't need to write the numbers. The numbers are on the scale. So let's use X's. So that was the point. Point were the X's, the evolution from figure charts. But now point and figure charts have evolved since then too. They decided that, well, we can identify uptrends and downtrends by using X's and O's. So let's just get that chart up here and we can see what I'm talking about. Now, right up here, let's actually go right click in the chart and let's go to data series. Right here in the very top, you see prices based on the last. That's fine. We can leave that. You'll see type. Now, right now it's a daily chart, so it's day, right? And the chart style is candlestick. But I don't want to do a traditional chart. If I scroll down, we're going to go to point and figure. Now, point and figure brings up a completely different menu because it has different inputs. There are two main inputs, which is how many ticks for each box. What I mean by box is for each X or O. And then how many boxes do we need to reverse? You could use a 1-box reversal. The most common I've seen is a 3-box reversal. And in this case, the box size is the number of ticks. Now, we don't want a 2-tick box. That is going to give us something that's really too granular. What we really probably want to see is more of 100 ticks, like $1 a box. You can see on my price axis, it goes from 67 to 91. Well, what if we had, if you can imagine graph paper, a different box at each price point? You have a new box that spans $1. So I'm going to change this to 100. And my reversal is 3. So we'll leave that. It says days to load here. I'm going to up that to 30 just to see if we can get a better chart. And what I mean by better is just more data. Let's hit apply. Now, let's hit OK. Maybe we need to bring in more data, right? This is 30 days. Let's go to data series. And let's bring in 300. Let's see if we can do that. That would be fun, right? Hit OK. Now, it might be pulling. Nope, it just takes a little bit to build. And so we eventually have a chart that's full of X's and O's. And the more data you pull in, the bigger the range, the more y-axis we need. And so I've got this chart that has a bunch of X's and O's. Now, it doesn't have the grid that I like. That's something I might talk to somebody in the product management field. We'll see why this is doing what it's doing. It's really interesting because this isn't behaving the way we want it. Let's go to a pre-made chart that I have. Bear with me one moment. I might have confused it a little bit. Let's see if I have that handy. It's right behind here. So taking a look at crude. This is the result I'm looking for. This is the result of X's and O's, green and red. We try to give you as many clues to tell you what a point and figure chart is. Point and figure chart is used for a couple of reasons. One is to identify the trend we're in. Okay. green X's are a bullish trend. And then the red O's are a bearish trend. And also to possibly identify areas where we might be interested in going long, going short, and then possibly some price projections based on the patterns. We'll talk about a little bit about all of this. We're not going to go in super detail because there's just so much with point and figure. But I want you to understand what's happening here. So when we see a row of X's, you'll notice down here at the bottom, it tells me a date. That date is when that row of X's, I believe it ends. Okay. So you'll notice the date here is August 14th. The date over here is August 30th. That tells me that this trend was about 2 weeks. It took 2 weeks for crude to retrace this much. And then up here, it's been about a month in this trend. I don't really care about that too much, but let's talk about how this is constructed. So each box represents $1, 100 ticks. And when I'm constructing this chart, like today, we are in a box that goes to 78. The top of this box is 78. When I come in, and the software does this for me, but if I were creating this by hand, I'm looking at 3 possibilities for what can happen to this chart after today. I can look at an extension up another box, maybe 2. The market rallies, maybe 3, maybe 4. I don't know. Maybe it run 10 points, whatever it is. If the market continues in this direction, I'm going to add to the box as long as it fills that box. So if I hit 79 today on crude, I'm going to put in an X right there. I'm not moving over. There's no new column. I just move the X up. I just add an X. And if it continues to trade up, I add an X. However, if I do not add an X, the next thing I want to do is see, do we reverse? Now, what is a reversal? A reversal, in this case, my reversal size is 3 boxes. I have to really reverse to say, you know what, this uptrend is over, and this we're switching trends now. We're creating a new column. So let's look at this one that has completed and moved on. We were in an uptrend, and at some point, this X could not advance, but the market pulled back enough that we could add 3 O's in the other direction, which means we traded down past whatever this is, 74. I'm sorry, 73. So in order, it's easier to advance in the direction of the trend than to reverse. Now you could say, I want a 2-box reversal. Maybe you want a 1-box reversal, but that will change the way this looks. It'll change the patterns. It'll change a lot about this chart. So it's easier to say, let's continue in the trend than see a reversal, because a lot of times you're in a trend and you see a nice pullback, but then it resumes. Do you need to know that? Maybe not. Maybe you just want to know when the overall trend is continuing, or if it really reverses more than a pullback, we create a new column. Now, if that's the case, same set of rules, except we're seeing if we extend in the bottom direction. You know, if we're extending to the bottom. And that's what happened for a couple of dollars on this trade, or on this, I shouldn't say trade, on this market. And then at some point it couldn't go down any longer, and the bulls came in and they moved it up. And it has to move up substantively, right? Has to move up 3 boxes, offset 3 boxes before I can start putting the X's in. You could have a row, a column of X's or O's that do not change for a long time. Okay. But that is how we create those point and figure boxes. So when I see an X, a column of X's, I'm looking first to see, do we make a new X? Do we trade all the way up here to make a new X? I'd have to fill the entire box. We're at 78.23. We're trading in the new box, but I have to fill it. And if we can't do that, I don't draw a new X. If I don't draw a new X, then I can look and see if we reversed. And if I didn't reverse, guess what? We do nothing. So this is a longer term time period. So it's easy. You know, you could, as somebody who's doing a daily chart update of point and figure charts, you could do a whole bunch of stocks, you know, back 100 years ago, because a lot of them might have been very stagnant. Oh, what was the high? What was the low? I'm not changing anything because there wasn't a significant move. So that's the construction of point and figure charting. And what you see is trends. Oh, according to my point and figure chart, April crude is in an uptrend. It's really what I can glean from this chart. Now I mentioned patterns. The most common patterns we might look at are similar to what we see in the regular charting, in regular technical analysis, what we talk about. A lot of it has to do with trend lines, but the trend lines here are pretty standard, I would say, because they're either horizontal or they're 45 degrees. Now, 45 degrees is subjective because you would have to have a kind of a, let's say, 1-by-1 ratio for each box, and it's not always easy to get. But basically, from one, an example would be here's a trend line that would be a legitimate 45-degree trend line here to here. Okay, that's, even though it might not look like exactly 45 degrees, and I might not be placing it exactly at the bottom of that box, but if it were, you know, it might be something like that, where we go from the bottom of the O box to the bottom of the next X box, the next box with an X in it, and it trends upward or downward. And we can use that for support and resistance. Look how we have this nice uptrend and we get away from it. And when it came back down, where did it come to? It came down to the bottom of that trend line. And it did reverse, eventually breaking it. Well, what happens? That trend line becomes resistance. So, you know, these trend lines can be helpful when you're identifying where a market might come back to, or might find support resistance, trying to get above it, You know, if we extend, this might help us with trying to get above this. We might find resistance the next box up. So that's just kind of what I'm thinking with trend lines. Now the horizontal are used for double tops, triple tops. Let me just do one thing. My indicator here, that is the symbol watermark. I like this. It's on the ecosystem. It's a little too dark and it might obscure what we're trying to see, because I see something. Let's hit OK. I see something right here that's pretty interesting. Is you see when we're in a downtrend overall, but we see this these multiple columns of zeros, right? And what I can do is, as they're forming, I might say, okay, I'm looking for a breakdown. We tested once, tested twice, we tested a third time. Now, at this point, I'm looking for a breakout, or a breakdown, if you will, breakout to the downside. And if we don't get it, if we return to this, the more times you test, the bigger the thrust. So the bigger the move, generally speaking, not always, but generally speaking. If I mark this with, actually I like green on the bottom because it acts as support. Although, you know what, there is something to be said for when a support line fails. That is bearish, right? So that might be better shown as a red line. But generally, this acts as support, and then breakdown had a nice substantial move, right? Probably we were only halfway through this move when we broke down. So looking for triple bottoms, double bottoms, triple tops, double tops. These are things that can help us identify where there might be interesting areas to target and to break out of. Now, there is something to be said for what the targets are. They don't always come true. So in this case, we have multiple columns that are trying to break out of O's that are trying to break down, trying to break below. Question is, where could this go if it does, right? We think about that in technical analysis. We use triangle patterns, head and shoulder patterns, uh, cup and handle patterns. These do have some kind of measured move targets based on what happened in some way, shape, or form. And point and figure, no, not really different. There are a couple ways you can do it. One is, well, how many columns did it take to get through that bottom, right? 1, 2, 3, 4, 5, 6, 7. It was on the 7th that you broke out. Or you could use the height of the column as a target. The way that's more common, the way that works is if I'm looking at, we're in the down direction, so I'm focusing on the O's because they're bearish, focusing on the O's and saying, okay, here's the last O column, kind of we're in a sideways area, and I'm going to use this column as to help me find my target objective. And the formula for it is basically you take the value of this column, which is $6, and you multiply it by the reversal amount. So we needed 3 boxes to reverse and another factor of 3. So it's basically 3 times the value of the move before it that's coming out of let's say a topping pattern and the size of that move. Now I just like to think of it in terms of O's. We're in a point and figure chart. It's easier for me to think, well, 3 times 3 times how many boxes? 6 boxes. That's a lot. That's a lot. That's 36 boxes. So we didn't quite get that, right? Is that 36? Yeah, it's 3 times this move. That's a lot. It didn't get there. But you can use those as targets. Now there's another thing that we can do called what's called a catapult. Trying to find, it's not always easy to find examples of these catapults. So, by the way, if you want to join the chat, I failed to mention at the beginning, you can at ninjatrader.com/events. Mission Control is on the job there. And in fact, Mission Control, if you don't mind just dropping in that link, I do want to, I want to give everybody a resource that they can look at, which is, if you wanted to learn more, the definitive book or the definitive guide, Point Figure by Jeremy Duplessis. He is probably the world expert at it right now. I don't know of anybody else who can speak about this the way he does. He has, kind of made this his, one of his life's works. I can't say it's his entire life, right? But it's a great book. It goes into so much detail. It goes into the every nook and cranny about the differences between 1-box reversals, 3-box reversals, 5-box reversals, all these different ways. 1-box reversals are really interesting because you don't always create a new column. Depending on the situation, you might have X's and O's in the same column because of the way, 1-box reversal is a little more volatile than a 3-box reversal. So interesting stuff there. But he goes into the history, he goes into the construction, he goes into the patterns, he goes into the differences between the types of charts. It's a really great book. And you can probably find it your local bookseller online. And take a look at it there. I'm not affiliated with Jeremy in any way. I haven't spoken to him in a while, but it's a great book. So hopefully you can take a look at that. I was going to bring up another chart because you can use these. Now, this is a longer term chart. This is like the equivalent of maybe a daily chart, right? We look at these, and down at the bottom, there are dates here. These are dates, not dates and times. So what if I wanted to see something that reflects more of today's market? Like what's happening today in the trade? How can I use this as a trader? Well, it's a matter of our box reversal size. So let's go back to our data series. And instead of a box size of 100, which is a whole dollar, right? I want to look at something like a 10 box size. So 10 ticks. I'm not going to go back 1,000 days. That would be a lot. I'm going to go back, let's say, 10 days. And let's see. There we go. See if that helps us a little bit. No, what am I missing? Box sizes, 10. Point and figure. Let's do minutes. And maybe that's too much. Maybe I want to do 2 ticks. No, that's not working for me. Let's see where I got to. An intraday chart. Here we go. Nope, that's not it either. Boy, I have all these charts and they're not helping me. But basically what you can do is you can shorten up the tick size, and maybe it's just a matter of me moving to where the market is, right? Because where is the market right now? Let's take a look. There we go. Just had to hit that F key. Yeah, you know, with the way this resizes, it's sometimes you need to hit that F key to make sure you have the right scales. So you notice down at the bottom something different. Now I have times instead of dates. Now I have times of today, and this is all today's trading. So it might look like a little bit like a 10-minute chart or a 5-minute chart or even a 1-minute chart in terms of the trends, but it's really what it's doing is compressing that down into something that's more a little bit more easy to digest. So here's an example of this is kind of like a quasi what's called a catapult. Here I'm going to try and highlight this. Another common uh, pattern is the catapult. The catapult is when you have a breakout of, let's say, a double or a triple top. Now, what's interesting about this, you see these two X's are at the same level, and then you have a third X over here, but the column extended. That's actually considered a triple top. The triple top that's broken out on the third time, right? So I have a single top, double top, triple top breakout, but then a reverse. Then I've got another breakout waiting to happen. And look what happens. When it breaks out, it extends farther than this one did. This is called, that's like a return. We break out, but it doesn't get very far. There's a little bit of struggle. It comes back down, and then it launches, and it launches past this double top in a very big fashion. So, these patterns, you can look for a triple top, you can look for a double top, and that's fine. But if they're followed by another double or triple top, usually it's either a double or a triple followed by a double. That's a catapult, and it has implications for a bigger move to the upside. But we can do this on a different scale. Like we can look at it on a longer term scale. You can see what the longer term trading. Oh, you know what? We're in a bullish bias. Look at that. We just made a new X. Now these boxes must not start at 0. Maybe they start at 25 based on the data. Maybe this is because the low is at 25, but the box size is 100 ticks. We made a new box. Now you've got a double top happening here. So those patterns are very interesting. There's so much more to talk about with point and figure, but this is kind of the basics. Understanding the construction, understanding that just because we tick a new minute or a new 10-minute or a new 15-minute, we're not going to definitely get a new column. That this will, when this turns to a red O column, that might be a cause to be, hey, you know what? Maybe this uptrend is pausing. Now it could go sideways and continue, But if you're trading shorter time periods, if you're scalping, or if you're a short-term swing trader, you might use this to identify when that uptrend is turning around. And let's see, should we try to get on the other side of my long trade? Let's go short until we see that there's evidence of a reversal to the upside. So this is, and even if you're not trading with point and figure, it's just another bit of evidence to help you say, well, is the point and figure showing me a long bias or short bias in these different time frames? So again, so much more to talk about. It's a good start with point and figure, and Jeremy Duplessis' book is really great. If you get a chance to peek at it, you'll be wiser for it. But I think this is probably, we're running out of time. We're right at that 30-minute mark, and it always goes by too fast. I could speak more to it, but I want to thank everybody for coming, and just want to remind everybody, we'll be off next week. We'll be back with another exciting technical analysis subject in 2 weeks. In the meantime, have a great trading day.